Hey there, future Warren Buffets and aspiring financial wizards. Welcome back to EPK Capital's Deep Dive. On this channel where we make stock analysis so fun, you'll forget you're learning. Today, we're diving deep into a company that's been making waves, and not just chemical ones, SRF Limited. Is it a hidden gem, or just another shiny pebble? Let's find out. 1. Introduction. The hook. Ever wondered what goes into your AC refrigerant, your fancy Teflon non-stick pan, or even the packaging of your favorite snacks? Chances are, a company like SRF Limited has a hand, or rather, a molecule, in it. They're like the quiet giants of the chemical world, making crucial ingredients we all use daily, often without realizing it. But more importantly, is this quiet giant a loud opportunity for your portfolio? Stick around to decode the molecules of money. 2. The company and its promoters. Who is SRF Limited? So, who are these chemical maestros? SRF Limited is a multi-business chemical conglomerate, headquartered in Gurugram, India. It all started way back in 1970 as Shri Ram Fibers Limited, focusing on tire cord fabrics. Think of it as the early days of Indian industrialization, and the Arun Bharat Ram Group has been at the helm, guiding this ship through various transformations. From those humble beginnings, SRF has diversified massively. Today, their empire spans technical textiles, fluorochemicals, packaging films, and even coated and laminated fabrics. They're not just making stuff. They're innovating, holding numerous patents, and quietly becoming a global player in niche chemical segments. Imagine building a Lego castle, but each brick is a specialized chemical, and SRF builds the entire kingdom. 3. 10-year financial analysis. Decoding the numbers. Alright, let's get down to the nitty-gritty, the numbers. Because in the world of investing, numbers don't lie, though they can sometimes tell tall tales if you don't interpret them right. We're looking at data up to October 2025. Revenue growth. SRF has shown a remarkable growth trajectory. Over the last 10 years, their revenue has grown at a CAGR of roughly 15–18%. To put that in perspective, if your salary grew at that rate, you'd be sipping piña coladas on your private island by now. For instance, in FY 2015, their standalone revenue was around 3,800 crore rupees, which has ballooned to over 14,000 crore rupees by FY 2025, estimated based on current growth trends. That's some serious top-line expansion. Profit growth. The real magic is often in the bottom line. SRF's net profit has been even more impressive, clocking a CAGR of approximately 20–25% over the decade. This isn't just growth, it's profitable growth. Their net profit in FY 2015 was around 250 crore rupees, projected to be around 2,500 rupees crores plus for FY 2025. This indicates strong operational efficiency and pricing power. Debt levels. Now, are they funding this growth by mortgaging the family jewels? Not really. SRF has maintained a prudent debt-to-equity ratio, generally staying below 0.5x. As of recent reports, mid-2025, their debt is manageable and often used for strategic expansion, not just keeping the lights on. They're borrowing to build, not to bail out. Profitability, margins. Let's talk about how much they keep from every rupee earned. Their operating profit margins, OPM, have generally hovered in the 18–22% range, which is quite healthy for a manufacturing and chemical business. This consistency shows good cost control and a strong market position. So, if numbers were a report card, SRF would be getting straight A's for growth and profitability. But remember, past performance is like a rearview mirror. It shows where you've been, not necessarily where you're going. 4. Stock chart, technical analysis. What the chart says. Time to put on our technical analysis goggles. We're looking at the long-term stock chart of SRF, and boy, has it been a ride. Over the last decade, SRF has been a multi-bagger, delivering phenomenal returns. The stock has generally followed a strong upward trend, indicative of its fundamental growth. Support and resistance. Historically, key support levels have been observed around 2,000 rupees, 2,200 rupees, as of mid-2025 adjusted for splits, bonuses. This is where buyers often step in. Resistance, or areas where selling pressure increases, has been seen around 2,800 rupees, 3,000 rupees. Currently, if it breaks above this resistance with conviction, we could see new highs. RSI, Relative Strength Index, the RSI, which tells us if a stock is overbought or oversold, typically oscillates between 30 and 70. When SRF's RSI dips below 40, it often presents a good buying opportunity for long-term investors. Conversely, an RSI above 75 might signal caution, suggesting it could be overbought in the short term. Always combine RSI with other indicators. The chart screams growth stock, but remember, no stock goes up in a straight line forever. There will be corrections, consolidations, and days when your portfolio looks like it's had a bad hair day. 5. Benjamin Graham Valuation, the value investor's lens. Now, let's channel our inner Benjamin Graham, the father of value investing. Is SRF a cigar butt we can pick up cheaply, or a blue chip that demands a premium? Graham's formula, while simplistic, gives us a starting point. A popular version of Graham's intrinsic value formula is V equals EPS asterisk, 8.5 plus 2G, where V equals intrinsic value EPS equals earnings per share, TTM, 8.5 equals PE ratio of a no-growth company, G equals expected annual growth rate, over 7-10 years. Let's take some conservative estimates for SRF. As of October 2025, trailing 12 months, TTM, EPS, October 2025. Let's assume a conservative 110 rupees 120 rupees per share, based on projected FY25 earnings. Expected growth rate, G, while SRF has grown at 25% historically, let's be super conservative and assume a future growth rate of 15% for the next 7-10 years for this formula, as chemicals can be cyclical. Plugging these in, we get 4,427 rupees and 50 paise now. Let's compare this to the current market price, CMP, as of October 2025, which let's assume is hovering around 2,700 rupees, 2,800 rupees. Conclusion. Based on this simplified Graham formula and our conservative growth estimates, SRF appears to be undervalued at its current price. This suggests there might be a margin of safety for value investors. However, this is a very basic model, and a comprehensive valuation would involve discounted cash flows and peer comparisons. Don't go selling your kidney just yet. 6. Pros versus cons, the bull and bear case. Every investment has its angels and its devils, its pros and its cons. Let's look at SRF from both sides of the fence. The bull case, reasons to be optimistic. Diversified business model. They're not just a one-trick pony. With 4 strong business segments, technical textiles, fluorochemicals, packaging films, and coated and laminated fabrics, they are insulated from downturns in any single segment. If one division sneezes, the others might still be running a marathon. R&D and innovation focus. SRF invests heavily in R&D, leading to new product development and process improvements, especially in their high-margin fluorochemicals. This keeps them competitive and allows them to capture niche markets. They're not just following trends, they're often setting them. Global presence and exports. A significant portion of their revenue comes from exports, especially in fluorochemicals, reducing dependence on the Indian economy alone. They're playing on a bigger stage. Strong financials. As we saw, consistent revenue and profit growth, healthy margins, and manageable debt make for a robust balance sheet. These are the fundamentals that make long-term investors sleep well at night. Capacity expansion. SRF is continuously investing in expanding its capacities across various segments, signaling confidence in future demand and growth. More factories, more profits. The bear case, reasons to be pessimistic. Cyclicality of chemical industry. Let's be real, chemicals can be cyclical. Demand and raw material prices can fluctuate significantly, impacting margins. A global economic slowdown could certainly play spoilsport. Environmental regulations. The chemical industry is heavily regulated. Stricter environmental norms or new compliance costs could impact profitability and operational flexibility. Governments love to regulate, especially chemical companies. Competition. While they have niche strengths, competition from both domestic and international players is always a factor, especially in segments like packaging films. Someone else is always trying to steal a piece of the pie. Raw material price volatility. SRF uses various chemicals as raw materials. Fluctuations in crude oil prices or other key input costs can squeeze their margins if they can't pass them on to customers. High valuation, relative. While our Graham model showed undervaluation by traditional P/E ratios, which could be in the 25-30x range, SRF might still appear richly valued compared to broader market averages. Growth comes at a price. 7. Important checks, scandals and global standing. Before we wrap up, let's do a quick background check. Any skeletons in the closet? Scandals or controversies. Thankfully, SRF Limited has largely maintained a clean corporate governance record. There have been no major scandals or significant controversies that have materially impacted the company's reputation or operations in recent history. They're like that squeaky clean kid in class who always does their homework. Global market position. In several of its segments, particularly fluorochemicals, refrigerants and specialty chemicals, SRF holds a strong position not just in India but globally. They are one of the leading manufacturers of certain refrigerants and have a significant export footprint. This isn't just an Indian success story, it's a global one. 8. Conclusion. A balanced summary. So, there you have it, folks. SRF Limited is a fascinating company with a strong track record of growth, robust financials, and a diversified business model that provides resilience. While the stock has been a spectacular performer and appears undervalued by a basic Benjamin Graham model, investors should always be mindful of the cyclical nature of the chemical industry and potential raw material price volatility. Their focus on R&D and strategic capacity expansion are definite positives for future growth. SRF is not just a chemical company, it's an innovation hub that touches our lives in countless ways. Whether it's a long-term compounder for your portfolio or a stock to watch, it certainly demands attention. Remember, this analysis is for informational purposes only and is not financial advice. Always do your own thorough research, consult with a qualified financial advisor, and understand your risk tolerance before making any investment decisions. Don't blame me if your portfolio doesn't magically turn into a yacht. If you enjoyed this deep dive, smash that like button, subscribe for more awesome content, and hit the notification bell so you don't miss our next financial adventure. Until next time, happy investing, and may your portfolio be evergreen. Disclaimer. This video is for educational and informational purposes only and does not constitute financial advice. Investors should conduct their own due diligence and consult with a qualified financial advisor before making any investment decisions. The host and channel are not liable for any investment losses. All data is for illustrative purposes and based on publicly available information as of October 2025.